What is going on, traders? Another trade review for you guys. We're going to do a recap of a trade so that you can learn exactly what types of setups we look for, maybe help you in your own trading, even if you're not part of the academy, help to manage your risk, help to identify what an A+ setup is. Now, I try to keep these small account friendly as well, because what is the sense of me flashing my gains to you if it took me, 6 figures to make those gains? A lot of times you'll see people online flash, $40,000 gains or $100,000 gains. Obviously, they're risking a lot more than that. And that is not realistic. Like it may be for clout, it may be because people want to sell their services or whatever, which is fine. But for someone who is working a 9 to 5, for someone who might not have a huge budget, there's no way in hell that you're going to make $40,000 if you have a small amount, unless you are risking it and playing it like it's the lottery. So I always try to make these trade reviews small account friendly to show you that you don't need a ton of money to manage risk. You don't need a ton of money in order to have a positive risk to reward ratio. You don't need a ton of money to find A+ setups. Now, I don't, I'm not advocating that, or I'm not projecting that you're going to be a millionaire starting with $1,000. But in this case, for instance, this was a 3x trade, turning $500 into $1,500. So the first trade we're going to go over is a futures trade that we took today. And then I'm going to give you a bonus with an Nvidia options trade, because I know that some people trade options, some people trade futures. Although, in my view, I think you should start leaning towards futures, because I think it is more advantageous in terms of risk management, although the gains in options could be disproportionate compared to the gains in futures. So there are pros and cons of each. Anyway, let me not babble. Let me go on and talk about this trade. So this trade was sent out in the academy today. It was a trade on ES, which is the S&P 500 futures, and it was a short. Again, the risk to reward was 3-1, meaning that I risked $1 to make 3. In this case, it was $500 to make $1,500, right? So a 3x trade. Let us get into it. But before I get into it, I just want to say, if you are confused on futures, it is nothing confusing at all. It is face value pricing. It is just like trading stocks. The price that you see is the price that you get. You're not dealing with Greeks. You're not dealing with theta, delta, gamma, vega, etc. Right? It's the price that you see is the price that you get. I think the concept and the name might confuse people, but I have a whole tutorial on how to trade futures on YouTube. Just YouTube, how to trade futures, the traveling trader, and you should see it. It's a whole free tutorial from A to Z, how to trade futures. And just for shits and giggles, if you're watching this and you want to be a part of the basic academy, where you get access to the chats, the alerts and stuff, I will leave a coupon code in the description that is only good for those of you that watch this video, and it will only be good for a little bit of time after this video is uploaded. So make sure if you see it and it is live, take advantage of that coupon code. You'll get access to the live chats, the analysis, the trade alerts, etc., but you won't get access to the live trading or the masterminds, the regular masterminds that we do, the mastermind calls, or the courses, in which case you will need to be a member of the academy, which you will also see if you want to take advantage of as well. So click the link, come and join us, take advantage of that coupon code, and let's get right into it. So this trade, again, was on S&P 500 futures, and I was looking at the 2-minute chart. Now, the criteria for taking this trade, let's review what I review on the mastermind and what I review on these trade reviews. You can screenshot this, whatever. This is my criteria for taking a trade, right? Identifying liquidity, market structure shift, retracement into a point of interest. I know that these things sound complicated, especially if you're a beginner, but you need to be watching these videos on repetition, seeing every single trade review so that you could see how we're taking these trades. And then obviously the risk to reward. Let me show you what it looks like in practicality, right? So in this case, we had an uptrend in the S&P 500. And you could see here that on the 2-minute chart, and in terms of which time frame I use, I cycle between the 5-minute, 3-minute, 2-minute, and 1-minute, and see which one is giving me a trade entry. There is no magic time frame. It's the time frame that is able to tell you the story and able for you to make up a story for you to take a trade from, right? So in this case, we're making higher highs and higher lows. And then we get to this point right here where we make a higher high and a higher low, another higher high, And then we finally break this low here, right? This right here is called a market structure shift, market structure break, whatever you want to call it. Change of character, change of market structure. I don't care what you call it. The concept is the same. Now, I was initially looking for an entry here, right? This imbalance, this retracement here. Because remember, we look for a market structure shift, and then we look for a retracement into a point of interest, right? And now you can use the Fibonacci, you can use you can use a fair value gap, you can use a combination of both things. I tend to use a combination of both things. And in this case, this was where the 0.5 fib level was. We also had a fair value gap, which is a type of imbalance. You can Google how to use those. It was coined by a trader called Inner Circle Trader, or ICT. I personally am not an ICT trader strictly. I do use some of the concepts because I find them helpful. So do not follow me if you wanted to learn ICT. But this is how I incorporate that into my strategy. To me, trading at a certain point makes common sense because I do have this criteria, and I don't enter trades that fall out of this criteria. So trading to me is very mechanical. It's very common sense. And I found a strategy that I put together using a combination of things that back tested over time shows to be highly profitable. And right now we are 13 for our last 15 trades in the academy. So you could see that after breaking market structure, we did retrace back up, but we barely fell into this fair value gap here. So I didn't have an entry, missed my entry by a few ticks, right? So in this case, market came back down to the same level that we broke the market structure with. You can call this equal lows or whatever you want to call it. So to me, there was an actual low risk, very, very low risk. As I said, it was a 3-to-1 trade, a very low risk trade from here. This imbalance right here. Again, once you learn how to draw fair value gaps, you will learn how to pull up these boxes here. It is basically, a pattern or a recognition of an imbalance based off of 3 candles. You take the low, in this case, of the first green candle, and you take the high of this next red candle. Then you have this huge candle between. The in-between is the imbalance. But again, if you decided to use the Fibonacci, you would end up with, you're right at the 0.5 level once again, which is a pivotal level to take trades from, right? So even if you were just to use the Fibonacci, let's see if we pulled up the moving averages. Even if you were just to use moving average, which people love, you would see that we have actually crossed into the 21 EMA as well, which is usually if you're looking for a retracement, people who use EMAs will use either the 8 or the 21 or the 10 or whatever in order to take trades from. So regardless of the criteria you use, you're looking for a retracement, and then you want to short from there. So we took this short from here. Now, the beauty about this short is that our stop limit was only 2 points above our entry, right? So in this case, our entry was at 42.9250 on the S&P 500 futures, and our stop limit was 42.9450. That's 2 points. It was right above this candle, giving ourselves some leeway in case the price did go up. We gave ourselves some breathing room in case the price retested more into this imbalance before coming back down. So it's a 2-point stop limit, which equals $100 per contract on the S&P 500. If you took 5 contracts, that's a $500 stop limit. Now, I did talk about something in our last mastermind. And by the way, I will have a free mastermind coming up on I believe it's June 16th. Sorry, it's June 18th. You want to make sure that you get on this waiting list if you want to join the free mastermind call. This is something that we do only with Academy members. We rarely open this up to the public. However, we are opening this one up to the public. It's absolutely free. You have no excuse not to join. The recording will be sent out if you sign up afterwards. So make sure you sign up. There will be limited spots. Once they are gone because we can only fit so many people in a Zoom call. So make sure that you sign up for the mastermind. But in our last mastermind, I was saying that when you take a position size, right, you want to make sure that your position size is 1 to 2% of your trades. Of your portfolio. However, the people make the mistake. I think traders make the mistake of making their entire position size 1 to 2% of their portfolio. Your position size can actually be way bigger than that if you are confident in what you're doing. So for me, I would much rather, if you have a portfolio, say, of $100,000, and 1% of your portfolio or 2% of your portfolio is $2,000, instead of making your position size $2,000, for me, if I'm confident in a trade, you want to make sure that your stop limit, so this 2 points here above your entry, is what would amount to 1 to 2% of your portfolio, which means your position size can be a lot bigger, and that way you give yourself a higher chance of profitability, right? So we retraced and then into the area that we were looking for. This is a very simple setup, and we started coming down, and I targeted this area just based off of the fact that we had a block of orders here, right? And then obviously you have a low here that you can also target. I targeted this area for take profit, and that was it. That's all I needed. I took more than one trade today. I shorted Palantir for 83%, but that wasn't an official alert. That was me just taking a higher risk trade. And you can see that here. It was a Palantir put, a 15 put, made 83% within a few minutes on this one. And then the second trade that I took was the day before, was on Nvidia. And you guys know, if you're familiar with my content, I rarely, I'm not taking trades all day. I will make one trade a day, sometimes two, but they are optimal trades, A+ setups. And once I get my money in, and I get profits that I'm happy with, and the trade works out, I really stop trading. And even if the trade doesn't work out, I don't tend to revenge trade all that much. I will go back and review the trade that I lost and see if I would do anything differently. I actually lost a trade recently. I think it was on ES futures. I got stopped out for 2.5 points because we keep our losses small. And I went back and reviewed the trade in the Discord, and I said, you know what? I would still do the same thing over again. It's just a trade that didn't work out. I like the criteria. I would enter that every single time. So you have to be honest with yourself. Sometimes you take shitty trades, and sometimes you don't, and the trade just doesn't work out, right? But it will work out more often than not if you stick to your principles and your criteria. Anyway, so in this case, Nvidia, again, was off the 2-minute. It was a very similar setup to the previous one, except for the other way around. Instead of short, this was a long. So again, when it comes to market structure, it's once you start getting your bearings under you, and once you start doing it enough, it's actually very easy to read. And this was textbook market structure: lower high, lower low, lower high, lower low, lower high, lower low, lower high, etc. And then we finally popped above this lower high, right? This right here is your break in market structure. Now you can see that we have a fair value gap here. And then if you take the Fibonacci tool, you can see that it lines up with the golden pocket, right? For those of you that are familiar with my channel, you know that I use the 0.5 and the golden pocket, which is between 0.618 and 0.65. And if from this point on, we took the 387.5 calls. They were one strike out of the money. Our stop limit was down here, right? And remember, I don't set stops based on the option price. I set stops based on the stock price. And this was our stop limit was below this candle. So this was a 2-to-1 trade. Happy to take this each and every time. It did get very close to our stop, by the way. Got a deeper retracement than I would like, but still valid because our stop limit was below this candle here. And then ended up at our profit target, right up here. So we ended up exiting that. Again, that was for 25%, not a huge play, but I don't argue with the market. I will take profit when I see fit. I'll take profit when it suits me, whether it's 20%, whether it's 50%, as long as the risk to reward is there and I'm not, taking profit. I'm not letting my options bleed into oblivion and then taking minimal profit, right? Like I'm taking at least 2-to-1 trades each and every time. Hopefully this is helpful. I'm going to keep doing these because repetition is the key to this thing. The more that you see this, the more that you are exposed to it. Even if you are a beginner, don't be intimidated. Everyone starts somewhere. A lot of the members in the academy were beginners, still are beginners, but I've seen people fast track their learning in months. Anyway, traders, coupon code in the description below. Make sure you use it. Once they're gone, they're gone. Also, make sure that you sign up for the waitlist for the free mastermind. Once those spots are gone, they are gone. Leave a comment down below. Leave a thumbs up if you got anything out of this video. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.